Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Micheal Noel, who is the co-founder and CEO of Blockchain Consultants, Blockchain Weekly host, facilitator for the Phoenix Blockchain Meetup, facilitator for the Cryptocurrency Adopters Meetup, and a certified blockchain professional. He has numerous connections to private equity groups, angel investor foundations, and is on numerous advisory boards such as DigiBuild, Lock Trust, Ethera Labs, Lannister Holdings, Blockchain Equities, Hemp Harvest, and Swift Harvest. Micheal is a Kryptonite Ventures founding member and was certified by the EC Council as a certified blockchain professional in 2018. Micheal, thank you for joining us.
Well, that's a bunch. Maybe I should think about cutting that down a bit.
No, I think that's good. I think it just really highlights all the good stuff you're doing and establishes credibility and where you're from and so forth. So that's good. So what was your background before coming to blockchain? I know you're private equity, but what led you to this place?
Well, I was in finance and private equity for 20 plus, almost 30 years, I would imagine, if I sat down and counted them. I was the sell side manager, started the sell side for a middle market intermediary group called Dinan and Company. Dinan's still around today. At one point, there was just Mike Dinan and myself. I think that company's probably done about 40 billion in transactions. And I helped Mike built the buy side, I built the sell side, and pretty successful group there. I retired in 2003. That lasted about 4 weeks, actually. Just really, I don't seem to be able to get retirement down. It's a lot harder than it looks. But I started doing some consulting after that, business consulting. And around 2003, 2004, if you were around back then, companies needed help with stuff like CRM, ERP, EMM, and that kind of automated marketing and automated processes. I went to work for Clayton Mask over at Infusionsoft and started doing some consulting work for companies. 2011, a friend of mine said, hey, there's this thing called mining. And I went, I don't think I'm interested in mining. I have very soft hands. And he said, no, it's cryptocurrency mining. And I went, crypto what? And so he started explaining to me what it was. We started mining Feathercoin and a bunch of altcoins back in the day. And we still have a mining facility right now. We have a Ethereum GPU mining facility. I think we're doing 6 or 7 gigahashes right now. So we've got a bunch of machines that sit there and run and turn out Ethereum coins for us, kind of an investor group. 2014, I read some information, white paper, watched a video from Vitalik Buterin on Ethereum. That basically changed my world because I understood, I had private equity background and a lot of business acumen. I had reviewed thousands of companies, tens of thousands of companies in my career. So I really understood business processes and transfer of trust within businesses. And when I read about smart contracts, I realized this is going to change everything. Everything needs to be re-engineered. Everything needs to be retooled. So we started working on standing up smart contracts and doing different things with Ethereum. And we stood up a smart contract for a company that actually paid us, which was nice early on. And we started looking, different things we could do with smart contracts. And my friend, John Crockett, who's now my CTO, my partner, said to me, it's almost like we're blockchain consultants. And I went, oh, blockchain consultants, hang on a second here. Opened up GoDaddy and bought the domain for $49 back in the day. So we've been here a while. We're working with several clients. We've got several successful companies, several successful products that we've launched, and we're moving forward, rationalizing workflows using distributed ledger technology and helping companies actually move forward in the blockchain space.
Yeah, so you've been with blockchain for quite some time, and you've seen it come from the very early days up to today, at which it appears to be moving out of the early adopter phase into more of the mainstream. Just depends on your view of technologist and lead user and early adopter work, but it does seem like it's getting more broad acceptance. How do you see the industry evolving in 2018 and 2019? How far do you think it's going to get?
How far do I think it's going to get? Well, first, it's going to change everything. We had in the 1500s, we had this thing called double ledger entry. Before that, we just had single ledger, and there was books. You couldn't keep books from one different country or one different operation to the next unless you used the same type of a system. Lots of things. We really couldn't have a banking system. Double entry ledger gave us significant on-roads into being able to create banks and create systems and accounting systems and things of this nature. It changed the face of the planet. Distributed ledger is going to change the planet in the same way, and probably a little bit more disruptive than even double ledger entries were. So it's going to change everything, if that's what you're talking about. But you're talking about, what short-term, 2019, 2020, what's happening. There seems to be two different camps. One of them is the blockchain camp. The other is kind of the smart contract Ethereum camp. Well, what does that mean? Well, there's a thing called the Internet of Value, and that means we can transmit value from one place to the next. That's kind of the blockchain space, kind of a limited tool set, high value transactions. And some people believe that people would be willing to pay $50 a transaction for these types of high volume transactions where you can move money from one place to the next very swiftly outside of banking and the SWIFT network and governments and things of this nature. So it's kind of a specialized thing. It's moving money from one place to the next. There's some different feature sets that you can do and employ in this type of transactions, but mostly that's what it does. It's like a calculator. Calculator what does one thing and does it really well, does it really fast. There's this other thing, smart contracts, and most of this is on the Ethereum back end. Ethereum is kind of a different kind of cryptocurrency and a blockchain. Ethereum has the capability of executing or programming or standing up smart contracts. Think of these things as like a smartphone where you can develop apps and install apps on your smartphone. It begins to do different things. So Bitcoin is like a calculator and Ethereum is like a smartphone where you can do all these different types of things, including calculate real fast. So Ethereum has the Internet of Value, the same Internet of Value that Bitcoin does, but in addition to that, it has what we're referring to as the Internet of Trust, and we're able to transmit trust from one place to the next using the Internet. So I hope that was helpful.
Sure. So in 2017, we saw a lot of hype and hysteria around Bitcoin and the price of Bitcoin, and the dramatic rise got a lot of the media going and everybody starting to pay attention to it in a broader sense than 2010 or 11 or 12. And so it appears the technology is moving from emerging into more mainstream format. Now the question comes as to where is it going to have the biggest impact, in what industries, what sectors, who's going to adopt it. You see a lot of interest in fintech and supply chain, but the technology has issues too, scalability and standardization and all the usual things that come with emerging technologies where it just takes time to develop it out. And so from the investor point of view, they're trying to figure out where in the 2018, 2019, where are going to be the wins, who's going to be able to make that application work and put it out there. I don't think anybody would disagree in this group that it's going to be big and it's going to be the future. The question really comes as to the future is always unevenly distributed in the early days, and where do you want to place your bets in the next 2-3 years, because they're going to get there and make that work versus it's harder to do and it will take longer to get there. Where do you think the wins are going to come from in the next 2 years?
Well, I always say my crystal ball broke several years ago, so I'm not very good at prognosticating, and my opinion in 50 cents will buy you half a cup of coffee at Denny's. So I hope I can give you your money's worth here. But the way that I see things, Bitcoin is kind of a limited kind of a feature set. Ethereum is kind of a unlimited feature set with a limited transaction volume. And I think that's what we're seeing as far as the valuation is concerned, where Bitcoin is priced higher than Ethereum. I think we have another group out there that's called EOS, and I'm not quite sure what EOS is doing. They have about $9 billion in cash that's sitting in the bank that they're getting ready to do some things with on block one, but they have a hard time reaching consensus so far and a hard time actually executing. And it just seems to me that we can raise a lot of money in this sector on the ICOs and on the cryptocurrencies and we can place bets on things that are going. It just seems to me that sooner or later, and I think this is going to start happening in 2019 and 2020, fundamentals and execution are going to begin to play a lot bigger play than the speculation that we're seeing in the market today. So I look to fundamentals and who's actually executing. I don't think EOS is executing. I think Bitcoin has a good set of fundamentals that it executes on. They're not very broad. I think that Ethereum has a larger set of fundamentals that it executes on, but not with too much velocity. I think that Ethereum has got a couple of things on the roadmap. One of them is proof of stake. The other is Casper. The other is Plasma. And these things all involve a different mechanism, a quicker mechanism for consensus, sharding and the algorithms and things of this nature. All of these things that are on the testnet currently. So once they hit the testnet, they're being tested, and they're usually coming to fruition and on the mainnet fairly quickly within the next 6 months or so. And all this stuff is already on the testnet. We're already working with it on the testnet. So you can say that this stuff is going to be hitting in the next 6 months or so. Draw your own extrapolations. But at that point, you're going to have Bitcoin with a small set of features and a limited transaction volume, and maybe they'll increase the transaction volume, but Ethereum is definitely going to have, at that point, post the upgrades, and that's a very short period of time away, they could have unlimited feature set and a very, very large transactions per second, sometime in the 2,000 to 3,000 transactions per second, and gas will go down, and there's a lot of things that can lead me to believe that Ethereum right now at $400 is a pretty good bet.
So the scalability is one of the biggest issues with these technologies, and they always compare it to the amount of transactions going through Visa every second. Are you saying that Ethereum probably has the best shot at getting to that scale and level in the near future? Or do you think that some other technology will get there first to achieve the scalability issue?
I think the technology is the same. I think the way that they use the technology is different. There's consensus algorithms, there's sharding, and there's different things, the way you add the pods and different algorithms and the way you add the blocks. But it's basically the same technology. It's just a different way of doing it. One will use a red handle, one will use a blue handle. And, the people that use the red handle really want the... But there's not much difference as far as that's concerned. There are differences in fundamentals as far as the different blockchains and what the current, once you mint those coins, what they're capable of. Bitcoin is, we say, about 80% complete. Ethereum is about 30% complete. So yeah, I would say as far as scalability is concerned, Ethereum stands a wildly larger chance of being able to scale. And I would say sometime in 2019, 2020, we'll be at the several thousand transactions per second. Definitely not Visa, MasterCard, but definitely competing with it. Definitely not something you're going to buy your latte with at this point. You're going to use that. I mean, there's different types of coins out there. Dash is one, and different coins that are specifically focused on the payments and transactions. But that's going to be a high velocity, low margin type of business. Yeah, you can invest in Dash. Yeah, you can invest in a couple of the others. IOTA is another one, but it's difficult to invest in Internet of Things and different types of velocity. I think that really the one that's going to and the one that I use a lot, obviously, so I've got a dog in the hunt, obviously, because I build a lot on Ethereum, and I know a lot about Ethereum, but I think the one that has the best chance of scaling is going to be definitely, without a doubt, Ethereum, with the possible exception of EOS. Like I say, they got $9 billion that they're looking to invest, and they already have raised, so they've got to do something with it. But like I say, the problem, again, with EOS is they don't seem to be able to execute. So there you go.
Well, some applications need the high scalability, like fintech payments is the big one, but that's just not the only thing out there. In the supply chain world, just about every aspect of it is just all over the blockchain for the tracking and the audit trails and everything that comes with that, whether it be shipping or food production or whatever. I've not talked to anybody in supply chain that didn't just jump up and down saying, I want that. It seemed like some of the early applications will not require so much scalability. So now you get into the other aspects of it, which is cost to deploy, cost to maintain, usability. There's other factors that come into it. How do you think Ethereum's going to do on those factors?
I think that if you want to look at the feature set that Ethereum has that is definitive within the niche is scalability. spinning up an ERC20 token is not that much if you know what you're doing. If we have a workflow that we have planned on and have done our homework, maybe a couple of days worth of homework, it takes us literally a matter of a few hours to spin up a smart contract, spin up an ERC20 token and get that done. And it's very, very inexpensive to do. And they can have amazing implications on workflows. So that's the definitive advantage for Ethereum. It's easy to work with. This is beginning to sound like an Ethereum commercial, which it never was intended to, but I think that's kind of indicative of what we are in the industry. We've got a lot of altcoins out there that are kind of doing specific things. IOTA is one. If you're doing Internet of Things, what does that mean? That means I have hundreds of thousands of devices that are sending in really, 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 really small packets of data on a kind of a not too large interval. Then IOTA is the one to go. If you're doing payments, then Dash is a very good one. We've got a company here in Arizona that's spinning up a rideshare company, then it's based on Dash, so all the payments will be on Dash. So there are some scalable things if you are doing specifically one thing, where we currently have the technology to do those types of transactions and those types of velocities. Certainly nothing like the Visa network, but we'll get there eventually and fairly quickly. But that's just a specific application. Payments is just a specific application. Companies don't do just specifically payments and payment gateways. They do other things. Even the companies that do payments are, if you look at the companies that are providing payment gateways, they have other different services. So Ethereum there kind of wins out too.
So let's talk about Bitcoin for a moment. It started off as a means of transactions or to make payments, and then it got to be so valuable, it became more of a store of value. Where do you think ultimately Bitcoin is going to land in the crypto ecosystem when all is said and done?
Well, it certainly has a limited skill set of functions, but there are a lot of people that own it and a lot of people that protect the value of Bitcoin. You've got a bunch of billionaires. You've got a Tim Draper, and you've got a bunch of guys that own a bunch of Bitcoin. I think they want to protect that value, and I think they're quite capable of protecting the value within Bitcoin. So you can get out of it fairly easily. Where is it going to be? Where is it going to land? Probably, if you listen to Tim Draper, it's going to be by 2020, it's going to be at $250,000 per Bitcoin. I don't tend to share his enthusiasm for Bitcoin because in my conversations with Tim, I kind of found out that he's really a Bitcoin guy because he owns a bunch of Bitcoin, and he kind of dismisses some of the things that Ethereum can do and some of the other altcoins. So maybe that's kind of a little bit excited on his line, but he's got way more money than I do. So there again, my opinion, in 50 cents will buy a cup of coffee at Denny's, right?
Very much so, very much so. But we see a lot of companies putting together blockchain solutions, and some of them seem to be a little bit challenged getting out into the marketplace because they're relying upon these tokenized systems to transact. But the SEC has come along and basically said all these tokens are really securities, not because they were meant to be securities, but because people can take them and throw them on an exchange and sell them for a gain. And in their minds, it's not what you intended it to be, it's what you can actually do with it that counts. And as long as people can take these tokens and make money off of them, they're going to be considered securities, especially with the amount of money investors are putting into them and so forth. How do you think that's impacting the development of these systems where people had meant to tokenize these things? Because there's a lot of nice things to go with tokens and so forth, but the regulatory has come down pretty hard on that, and many exchanges have been shut down, and now we're just back to dealing with traditional securities for them more or less, even though they weren't really meant to be that way.
Yeah, the SEC has come out recently and said that Bitcoin and Ethereum are not securities, and I don't think they are. I think that's totally appropriate. Although they can be traded, and there's value that is speculative in nature, they're not securities. The securities more or less go to securitization of equity or something, right? And there's a thing called the Howey test. If Google the Howey test, there's some questions you can ask. There's some things you can look at. If it passes the Howey test, it's going to be a security. I've looked at a bunch of these ICOs that have gone out recently and said, look, if it looks like a duck, if it walks like a duck, if it quacks like a duck, it's a duck. And a lot of these ICOs that I've seen gone out were securities in my estimate. I stayed away from them. And as it turned out, the SEC has come back on a lot of them, and they're now clawing back, and they're making investors pay back they're making owners pay back all of their investors or face fines and jail. And I mean, there's a lot of really nasty things that are going on in the space. But that said, there's still a lot of good things that are happening. There's a lot of people that have built coins that are truly utility tokens and are not speculative in nature and do not pass the Howey test. Those are great ones to invest in. Those are great ones to buy and acquire. And as they increase in value, then your value will increase. I mean, the same way if you buy a silver coin, it's not necessarily speculative in nature, but as silver increases, so does the value. So that's totally appropriate. And the SEC says that's totally appropriate. Just be careful on what you're doing. I mean, understand what it is you're buying. Are you buying a utility token? Are you buying a security? If you're buying security, is there a Reg B, Reg A plus, Reg C? And if you're a sophisticated investor, then, go for it. If not, you should probably look at what you're doing. There are some challenges.
So the SEC is starting to tease this apart. I think they dropped the hammer last year because so much money was going into it. And sure enough, by the end of Q1, 40% of ICOs of 2017 were already dead. 3 months in, it's already out. So for sure, they had to put a stop to it. And now they're walking it back, saying, well, they're not all securities, and they're still trying to tease it apart. But in the meantime, what you see is efforts to try and separate tokens out from securities by doing a couple of things. One is they were trying to make them like stable coins. Here's a token, it can be used, and it can never change value. Therefore, you can't throw it on an exchange and get a gain out of it, and therefore it's not a security. What's your take on stable coins, and where do you think those are going to land in this process?
Well, the Howey test doesn't have to do with whether or not you can put it on an exchange and gain value. The Howey test has more to do with, does it represent equity in a person, place, thing, something, right? Does it represent equity in a company? If it represents equity in a company, then it's a security, and you can't get it. If it's a token, and tokens are like, I don't know, I'm an old guy, and I used to wash my car in a car wash, right? Except the one car wash didn't take dollars, because you had to put coins in there, and you had to walk around to the front, put your dollar in, get tokens, and put it in there, and then you can get your car wash. Tokens are things that do specific things, and that's all. And usually, not all the time, but usually, if it's a token, it's going to be worth the same a year from now as it was then. It's not going to really increase in value, but then again, it could. That's not part of the SEC's reign. It's all about, does it represent a security? Is it securitizing something? If it's securitizing something, then it is a security, and it passes the Howey test. And if it has a security, you better have a Reg A plus, and you better do your paperwork. Otherwise, you're going to get in trouble. To be very clear on that, it doesn't necessarily, there are utility tokens and tokens that are traded on exchanges that aren't securities. And I think they're very good opportunities. They just represent portions of Bitcoin is not a security. SEC has come out and said, look, Ethereum, Bitcoin, not securities. And they're traded on exchanges all the time. So there are some things to watch. There are some things that are totally appropriate. And there are some ways that we can get around this thing that the SEC is coming out. Google the Howey test and think carefully before you make investments.
Right. Well, the other approach people take to this is instead of fixing the value of it, so you can't treat it like an equity and sell it for gains and so forth, it can only be used for what it was intended to be used, is to limit the use of the token where it can never leave the platform. If it's meant to work on a platform to buy memory, it can never come off that platform, so therefore it cannot be treated like an equity somewhere else in the system. What's your take on that, limiting the mobility of the token in order to pass the Howey test and not let people do other things with the tokens than what was originally prescribed?
Well, I think that if you have a use case that you're doing, you should mint the appropriate token for that use case. Lots of use cases where that token only works within an ecosystem. The D apps that are set up for that only work within an ecosystem, and it'll never function outside that ecosystem. If that's really appropriate for that, then that's probably what you should build. I would really caution someone to look at the token that they are trying to build and change the platform or change the specifics of what that token does in order to skirt somehow the SEC. That's a losing proposition. Look at the use case and build the appropriate token.
Sure. So you mentioned several different altcoins out there. Which of them do you think are really going to have the biggest impact after Ethereum goes? Which ones do you think are coming up? You talked about EOS, but it didn't sound like you were too impressed with their execution. But do you see any other altcoins coming up that you think are executing well?
There's a couple of them out there that I'm really interested in. Some of them I have investments in, some of them I don't. One of them that I don't that I really love is a Dentacoin. Dentacoin is really doing well right now. They're providing dental services not only to the United States, which is kind of sometimes challenged in the area of dental insurance and dental providers and the way that they provide care, but also offshore and in developing nations. So we have the Dental Coin Network where dentists become members of the network and they take the dental coin in response to the services, and some of the insurance companies offshore are becoming more involved in Dentacoin. I think Dentacoin is very, very interesting. I think that obviously there's one out there that is called FOAM, FOAM. FOAM is a geospatial coin, so it's an application, it's a D app where smart contracts can interface with the FOAM network and understand where applications are or where pieces of their components of their smart contracts are geospatially. Quite interesting idea. I think that is tokenfoundry.com, FOAM, if I recall. I might be incorrect on that, but FOAM is a good one. Dogecoin keeps on coming up. I mean, Dogecoin is a coin that someone spun up a smart contract as a joke. And you talk to the people and you say, look, I was at Distributed in San Francisco this last week, and one of the evangelists for Dogecoin was there. And I said, look, it's a joke. And he said, yeah, but look. And he opened up his wallet with all of his Dogecoin and had several $1 million in Dogecoin. That kind of takes it away. It's no longer a joke. So, I mean, where do you go from here? Where do you draw the lines? So the lines are beginning to be unblurred. They're not as blurred as they used to, but Dogecoin seems to have some ups and have some downs, and it seems to have some interest.
What about tokens that represent assets, either hard assets like oil and gas, or precious metals like gold, or art like the CryptoKitties, where there are tools or tokens that represented the CryptoKitties, and that was hot there for a while, and it seems like it's cooled considerably since then. But where do you think the asset coins are going to land in this? Is it simply just going to be a tool that represents it, or do you think it's something that would actually help monetize it and transfer it and move it around the system? Where are those going to land?
There's some interesting things going on, and when you look at that kind of space, you have to look at it like a piece of property. So the real estate technology is basically the same as tokenizing an expensive painting is a lot of times very slightly different than tokenizing a piece of land. So there's a lot of these token coins are coming up. A lot of stuff is happening. Propy is in the real estate space. It's kind of the one that I go to as far as the demonstration is concerned. They've completed several transactions, have several pieces of real estate that are listed on propy.com. They just did a $300 million transaction, Bitcoin to Bitcoin, on their system. So they're kind of ahead in the space. But the thing that is interesting about what you're saying, the tokenization of assets, asset tokenization, is that it's difficult for one person. One person can own a painting. Very difficult for two people to own the same painting. We can have a painting that's owned by a group, and that's kind of difficult to do sometimes, because how do we keep track of who owns the painting and where? And the contracts sometimes get kind of clouded, and there's big issues with that in the transfer of trust. Where with the smart contracts, we can do fractional ownership very easily. And if the painting is not owned by the group, but the painting is owned by the blockchain, so we set up a distributed ledger to own a piece of art or real estate or some sort of a gold or something of this nature, and we have fractional ownership and fractional shares, it becomes very easy to keep track of. It becomes very easy to transfer ownership. It makes life a lot easier. It takes a lot of the middlemen, the brokers, the agents out of the system, and takes a lot of the friction out of the transaction. It takes a lot of the cost out of the transaction. I think you're going to be seeing some really big things happening in this space in the near future.
One of the things CryptoKitties did was they were actually using the crypto algorithms to create the artwork itself, and that's what gave each of those CryptoKitties uniqueness and at some level a limited supply. And therefore, because it's limited, you would have value going up because they were becoming more valuable as more people wanted a finite number of CryptoKitties itself. Where do you think the future of that is, where you're actually using the algorithms to create something that's digital only, but it can also be limited, so you just can't create a million copies or a million variations. You create, say, 100, and then as you trade and sell those, you can actually see the value rise because people want to have one for whatever reason, just because it's rare.
You ever heard of Beanie Babies?
Yes, and Beanie Babies, though, was a physical version of that, and this is a crypto version of that. And of course, we've all heard of tulips too. When it was hot, it was hot. When it's not, it's really not. But now we're doing it on the crypto world, and it just seems like it has a little bit different flavor to it.
Pet rocks are different than Beanie Babies, and Beanie Babies are different than tulips, but the psychological, the humanness of the purchases and the humanness of pursuing something that is scarce and creating scarcity when there is no scarcity, those are all things that kind of go into that type of market more than just being able to create something on a digital scale. We create something on digital scale, very difficult to get something that it can be copied. Someone can copy it and make the same one. CryptoKitties was kind of different in that each kitty was kind of different, and once that kitty was created, no one can create that same kitty. But still, it's just a digital thing that you own. It's an image. Where's the real value? It's speculative in nature. You can do anything in speculative in nature. It's a zero-sum game. The game is played in stocks. The game is played in cryptocurrencies. The whole speculation thing comes down to when someone wins, someone loses. And overall, 85% of the market loses and 15% of the market wins. There you go. You want to get involved in that? Go for it, man.
Great. Well, in the last few minutes that we have here, what else should we cover that we haven't?
I think blockchains is definitely going to change the way the world runs. BTCmanager.com, interesting article that came out on the 25th, just a couple of days ago, in regards to China's decision to choose Ethereum over its own blockchain. So NEO is kind of the state-run blockchain, and China is doing things in cryptocurrencies. They're breaking out cryptocurrencies, and they're breaking out different workflows in cryptocurrencies, and they've actually chosen, after a long process of looking at their own stuff, decided to go after Ethereum and begin to build on Ethereum. We have Dubai, the DLD, the Dubai Land Department. The Dubai Land Department is putting every piece of land in Dubai on a blockchain. They should finish up on that by the year 2020. And on the Dubai blockchain, not only will it keep track of who owns it, it'll keep track of the visa status of the person who owns that piece of property. That person will be able to pay the bills, pay the taxes, pay mortgage if there is one, pay the electric bill, pay the gas bill, all in crypto. So it's becoming very versatile, and it's replacing, entire industries. So definitely something to look at.
Great. There's a lot to get excited about for the future of blockchain and crypto and the tokens that are coming up. Appreciate your taking time to share that with us today. What's the best way for the audience to get back in touch with you?
I have a couple of ways to get a hold of me. First of all, blockchainconsultants.io is my website. There's a form on that. Fill the form out. I'll get back to you. If you want to, my calendar application is there. So if you want to go to blockchainconsultants.io, click on the calendar. You can actually schedule a hour with me. Very easy to do. Just find a time that I'm available. Usually, sometime within the week, you can find a place and we'll sit down and have a chat, talk about whatever it is you need. If you're looking for development, that kind of stuff, we can definitely help you. If you're looking for further education, I do a thing called Blockchain Weekly. Blockchain Weekly, every week I interview someone who's doing something interesting in the blockchain space. I interview people like Eric Lai. Eric Lai is the co-founder of LinkedIn. He's working on a project called Hub Token. Hub Token is in the identification space, so being able to identify someone on a blockchain or identify someone by blockchain or identify someone by a preponderance of several different pieces of evidence and store that on a blockchain so we know who you are and we can interface with that persona. Eric's a very smart guy, obviously, interviewed him. There's Ben Wei, who is doing digits.io. Digits.io is a cryptocurrency card, turns
your current credit cards and current debit cards into cryptocurrency cards. Very interesting stuff there. Ether Labs, which is another one. We've done quite a bunch of interviews with diversity in blockchain. There's a group out there called Diversity in Blockchain, and the top 10 women in blockchain. We've interviewed a bunch of them. So interesting stuff on the blockchain channel for Blockchain Weekly. And that channel is youtube.com/C/blockchain weekly, or just go to youtube.com. In the search bar, type in Blockchain Weekly. You'll see the channel. There's 40, 50 different videos. You'll be able to click on one of those, watch it, and understand how someone is using blockchain in workflows currently.
Well, that sounds great. We'll put that in the show notes as well, and hope to have you back for a follow-up soon. So appreciate your taking time, and we'll look forward to seeing you soon.
Thanks so much, and I enjoyed it immensely. Thanks again.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.